Major grains dropped on Thursday along with cotton. AgDay's Michelle Rook dives into the cotton market with John Payne in today's Markets Now.
Joining us with Markets Now is John Payne. And John, let's talk about the cotton market, which has been fairly sideways recently. Talk about what could break us out either side of that.
Well, the Chinese economy is probably the most thing to watch here. They are the linchpin of Southeast Asia, which is essentially the linchpin for cotton manufacturing in the world. So you've had weak currencies there. It's kind of bled all the way down to the hierarchies of Asian demand would fall down to like Vietnam, and even prices there have surged. But at this point in time, with COVID coming back, there's concerns about demand. I think the market has a hard time, with what's going on in China. Are they going to be able to suffice from the consumer side of things? From the producer side, I think you'll see lower acreage here in the U.S. next year. You have problems in Pakistan and problems in India. I would imagine the market, especially if those deferred contracts, is going to need to find a floor. And I can't imagine anybody's going to stick their neck out and sell that far ahead, given the profit margins, the interest rates, and just the overall uncertainty with the global economy. So I think at this point in time, cotton in the shorter run probably runs into some issues when we see milling in the overseas markets. I think those folks will start to sell because they're not going to want to carry that risk. But long run, the amount of stimulus that China will use to try to help their economy, I think will eventually take hold, and I think that'll be inflationary as well.
So when does that kick in, though, that bullishness, and what should producers be doing from a marketing standpoint right now?
Well, buying insurance, that would be the one. I mean, at this point, the best thing that cotton producers have is the USDA insurance because, you can get it at good levels. You can lock in essentially a level that'll cash flow. So in reality, you use somebody like us to hedge before the crop insurance gets set. And I think right now we're entering that period where it makes sense to do so. And then I think looking at next year, watch that cotton price again. If it gets something to the mid-high 85s, the 90s, I think then you look to get ahead of it. I just don't think right now, the consumer is rationing. It's going to need to ration. And what we heard from the Fed on Friday was something that could kind of, I think, make a dent in consumer pocketbooks. And I think that's probably coming from clothing and retail sales.
All right. Thanks, John. John Payne with HedgePoint Global Markets. That is Markets Now. We'll have more AgDay coming up.
To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.